Good morning, and thank you for taking the time to be here today. Today we are going to talk about student loans, as there has been some recent movement on student loans by the Department of Education, and with recent graduations, it's a good time to talk about some of the details. For recent borrowers, you will likely have one or more of the following types of loans: federal direct loans, federal direct parent plus loans, federal direct grad plus loans, or private loans. The federal loans will be listed on your NSLDS loan summary document available at studentaid.gov, or typically where you log in with the FAFSA. All student loans will be listed on your credit report, so that will include federal and private loans if applicable. If you are a recent grad, you will have a 6-month grace period before repayment begins on your federal loans. Repayment start dates from private loans may have a payment variability. They might be due while you're in school, they might be due immediately after graduation, or they may have a different start date as well. Just depends on the lender's terms. From there, typically federal loans have a fixed interest rate. Typically private loans are likely to have a variable interest rate, but not always. Federal loan programs are also applicable to forgiveness programs. Federal loan forgiveness are applicable to federal loans only. So make refinance decisions from a federal loan to a private very carefully. This can't be undone. Forgiveness programs from employers or other government agency programs may be able to be used towards federal and private loans. You just need to read the fine print. 2 examples of programs where payments can be made towards private or federal are the HRSA, the Health Resources and Services Administration, and the NHSC program, the National Health Service Corps programs. The Public Student Loan Forgiveness, PSLF, is a forgiveness option when borrowers work for a qualifying nonprofit employer and complete 120 payments if they have federal loans. There is a federal student loan forgiveness program that may be achieved when you make 20 to 25 years of payments in income-based repayment plans and the balance of the loan is not paid off at that point. For simplicity's sake, I'll refer to that as non-PSLF forgiveness. Over the past 5 years, there's been a lot of loan confusion and chaos. Some of the confusion has been positive, with no payments due, no interest accumulating, and many of those non-payments counting towards PSLF and non-PSLF payment counts. The recent announcements impact the following. Payments have restarted and are due for most repayment plans, except for if you're in the SAVE repayment plan and this is still tied up in the court system. You likely don't need to restart your payment plans at present if you're in SAVE, but you want to double check on that with your loan servicer. If you are in SAVE, though, your non-payments will not count towards PSLF and non-PSLF forgiveness repayment counts. So that had been happening previously during the COVID forbearance. You can get prepared in a number of ways. First, being knowledgeable. Compare standard repayment, income-based repayment, and private refinance payment amount. What is it going to cost you per month? What will you pay over the duration of the loan? And understand the terms and conditions, the trade-offs of those options. Look at your budget. Determine what you can afford to pay. So this is a big piece of the puzzle. Sometimes those standard repayment payment amounts are really high and they seem insurmountable. So that's when income-driven repayment plans can be a more viable option, at least for the short term as you're getting your budget in order. Determine if you qualify for a forgiveness program. I also am highly emphatic that regardless of whether you need to pay off a loan or you're working towards a forgiveness program, you need to have a plan in place. And then you do need to start putting money aside into your savings account, even if you're in your grace period or you're in save and you don't have to make the payments just yet. Start getting into that habit. The money is going into the savings account. If you don't need to make a student loan payment, you could be building up your emergency fund. You could be saving towards a bulk repayment amount. You might not need to do that if you're in PSLF, but if you're paying off the loan, you might want to make a bulk payment at some point. We always want to have a balance in that budget, being able to afford your expenses, being prepared for an emergency, being able to make your student loan payment. Again, if you're not sure of what your best option is, I provide student loan analysis and budgeting programs. Other financial professionals do as well. You want to find a good option that's affordable and makes sense. Again, if you're struggling with payments, you don't want to put yourself in a tougher position, but it may be advantageous to get some help. There are calculators available as well on studentaid.gov to estimate what some of the payments are. And again, make sure that your loans are in good shape. You want to log in with the loan servicer, make sure when the payment is due, what the payment amount is, keep your documentation, keep it on file. If you have been in save and those non-payments are not counting, but you're working for a qualifying nonprofit employer towards PSLF, you may have the option to buy back those non-payments, which typically just means making those payments that weren't made previously to get credit for those months. And again, just want to make sure that you have things in good shape. Revisit your plan on an annual basis at a minimum. You want to be checking in monthly to make sure the payments are credited and that nothing looks not as planned. And again, the last thing is some of the recertification of information has been a little chaotic. That deadline kept getting pushed back. It likely is fall of 2025, but you do want to make sure, log into that loan servicer and see, do you need to recertify your income, recertify your payment account for PSLF. If your repayment amount looks unusually high, you may have been put into the standard repayment plan. That may be an error. You do want to call your loan servicer and ask, when was the recertification due? And sometimes this requires a little bit of persistence as well. If you've looked up the information, you know what it should be. Sometimes you do need to, kind of reach out and talk to someone a couple times with the loan servicer. So thanks so much for being here. I appreciate your time. I'm Kelly Reddy-Heffner. I'm a financial planner, and I am grateful to have spent this time with you this morning. Take care.